Welcome back, everyone, to Military Family Investing. Here I am with another one. All right, I just published this article today, the date being February 4th, 2023. So, annuities versus income investing. All right, now a lot of you people, a lot of people listening aren't at the age of getting an annuity. All right, but it's still vital information because if you do end up at 60 with a large lump sum of money, let's say 300K, and you don't know what to do with it, then you're probably going to turn to an annuity or potentially a bond. Okay. So let's take a look. Do you like betting against yourself? That's what I call it. Do you think somebody can handle your money better than you? I don't. I for sure don't. All right. So here's a look at the book. I like the red. Don't bet against yourself. It's a tagline. Go ahead and download it, read it, enjoy it, share it. Okay. Every American should have a dividend portfolio or income investing portfolio. All right. That is the way life was meant to be. Go to work, invest in income producing assets, real estate, dividends, bonds. Eventually, you'll have enough money from those investments to retire. Okay. So along the way, they've the work, the employers convince us to with pensions and healthcare, and then they start taking those things away because they were very costly. So now you have to be a financial expert to retire on your own. Does it suck? Yes. All right. And they're not preparing us at school to become a financial expert. So we're stuck working. Anyway, now it takes big numbers to retire. Okay. If you want to make $40,000 a year at 4%, that's $1,000,000. Okay. Income investing, what I do is a higher yield, closer to 8 or 9%, as we'll see later. All right. Now, when you do an annuity is sold by insurance companies. They're betting against you. They're betting against your life. Okay. They only do things that make their odds good. Their numbers work. All right. So you turn over X amount of dollars, you pay a ton of fees, but you turn over, say, 200,000, and they say, okay, we'll give you a guaranteed 4% return. Guaranteed 4% return. And on top of their fees and everything else. And then when you pass away, that money stays with the insurance company. Okay. No generational wealth. Right now, you can get a 4% yield on the treasury bond. So with no fees, and it's from the government, nothing hidden at all. No hidden costs, no intermediary, nobody in the middle, right? But you have to know these things. Okay. Anyway, there's a lot of different annuities. Some of them, survive with your spouse. Some of them go up with the stock market. Like they might say guaranteed 4%. Plus, if the stock market does well, you'll get an extra 1%. But, if you're investing in the stock market yourself with index funds, guess what? You're getting 9, 10, 11, 12%. So they're guaranteeing you 4 plus 1, so 5%. Guess what's happened to the other 7%? Exactly. They're betting against you, right? Now, like I said, you can convert, you can buy 30-year bonds at 4% right now. All right. So you can get that 4%. Is it enough? Potentially not. But if you use that money and invest in other products, yeah, it could be enough. Or if get a roommate to pay for your mortgage and you don't have a mortgage, or you paid off your house, yeah, that 4% could be enough. You have to be smart. Like somewhere else in your life, you have to make a change, right? You can't just outwin it with money. It doesn't work that way. Some people try, keep making more money, which is great. But they're creators, they're producers. They already have an audience where, okay, I need to make more money. I'll make another online course. And then they double their income right there, right? If you haven't done that, then you're going to be struggling. Okay. So an annuity, $50,000 annuity at 4%, $2,000 a year, 166 a month. Okay. 166 a month. All right. I mean, $50,000 isn't a ton of money. 166 a month guaranteed is not bad, right? I mean, it's not good, but it's not bad. That's if you don't have a house payment, maybe that's your 2 weeks of food, right? And then you do another 50,000 and that's another week. That's your, you know, $300, $350 a month in food. Not bad. Not bad. Guaranteed. You're 65, you're guaranteed until you die. Eh, meh. But if you don't know anything about finances, sure. Now, what did I do with 50,000? Okay, I'm 41 years old. Here's my 50,000 right here. Inside, I can highlight it. Inside my Wells Fargo account. Okay. Stock market's down a little bit. It came back, actually. It was down negative 20. It's coming back. But look at that annual yield. $4,100. That's twice what the annuity is paying. Twice. That's 8.5% yield right there on cost. Just looking at it. Okay. And I have a lot of index funds in there. I have Apple stock in there. Things that don't pay much or don't pay anything. Okay. So this is not a pure income investing portfolio, but it's about 70%. Look at that. $4,100. Okay. So I'm already getting this. This is what I'm already getting. $343 a month. And you can say, well, you lost $3,000. Okay. When you turn over your $50,000, you lost the whole $50,000. I can still sell this and get my money back. I might have quote unquote lost $3,000, but I've already got more than $3,000 in dividends over the last 3 years. So who can do it better, me or them? All right. Now, when I have my 343, since I have the knowledge, I can reinvest that. I can reinvest, say, $100 a month and make sure that my portfolio keeps growing. Heck, I can reinvest $143. Oh, I'm sorry, almost $200, and still be at what they're paying, and reinvesting $200, and still already beat them. So I'm growing my portfolio each month. And when I go away, guess what? I gift this whole portfolio to my kid. This portfolio will grow out of control. Just if I never even reinvest. Just putting that 343 back into it every month for the next 10 years is going to grow out of control. Because I still have dividend raises. I still have, special dividends, whatever. It's going to grow crazy just leaving it how it is. That's the value of the education. So I'm in control. Now, if I want to have more yielding products, right? If I want to shoot to get that to a 10% yield, yeah, it's riskier, quote unquote. But if I'm feeling froggy and I want to do that for 5 years and 3 years, and I just want to invest in super high income over 12%, I can. That comes with certain trade-offs. I won't say risks because I know the risks. It comes with certain trade-offs, meaning that these products are highly leveraged and they can go down. If they're tied to mortgages, if they're tied to bonds, tied to leverage bank loans, they can go down during a downturn. I won't lose my money per se. I'll still get my dividends. However, when I look at the numbers, it's just going to look like I, quote unquote, lost money. I can deal with that. I'm okay with that. I just want the income. I want the paycheck. Okay. So I'm using compound interest to my advantage. Okay. When you turn over your money to an annuity, you're no longer getting the power of compounding. You're getting a set amount. They're not reinvesting whatever they earn over 4% into you. It goes in their pockets. On top of that, the fees. So again, a lot of people, you're kind of younger, maybe in your 40s or 50s, and you don't have annuities yet. But these products are everywhere. You talk about reverse mortgages, annuities, um, long-term health care insurance, all these things, right? Everything's betting against you and your lack of education. The only way to turn the tides is education. Why do you think I write books? I can say all this little knowledge on YouTube, but it's not gonna it's gonna get you started, but it's not gonna get you finished. All right, you have to read and understand, have a profound understanding of these things. Reading is still the best way, the only way to get a deep understanding of stuff. All right, you have to understand these things deep. All right, that's why I keep writing and writing and writing and writing. So I ensure that I understand what's going on. So me and my wife are going to retire early, and I'm still going to be an income investor. All right, I'm still going to do things to produce income so I can invest in income products. All right, so my income portfolio produces generational wealth. All right, so what that means is I can now turn that over, and maybe my kids are doing well, and I'm like, hey, let's put this income portfolio that's spitting off $1,000 a month. Let's put that in a trust fund, and ensure that 25% of the dividends go back towards the reinvesting, but then that's split it 3 ways between the grandkids. All right, so then they're 5 years old with $300 a month. All right, and the kids can start using that money to invest for themselves. But again, these things go up in time. So by the time they're 18, that's $1,000 each, plus whatever they've been saving. You see how powerful that is? And that's not even a super huge portfolio. Did you get $300 a month when you were 5 years old? I didn't. Did you get $300 a month when you were 18? I didn't. How about when you're 40? Nope. Nothing for me. So I had to figure it out. All right. This is powerful stuff. So I'm very passionate income investor. It plays in. That is my favorite part. My favorite type of passive income. However, you still have to do more, right? You have to live below your means, create a lot of cash flow in your house, find additional ways to earn income without sacrificing too much time, right? Renting rooms is my favorite. We have uh, rental properties, right? So now my kids don't have to worry about inflation because their mortgage is already set. They haven't even graduated high school yet, but they have mortgages. So by the time they turn 30, they don't have to go look for a house. They already have a house. So that's going to be huge, huge for them. And then I do dividends. And I also write books. So when I get paid for my books, I just turn it right over to my dividend portfolio, right? The cycle continues. All right. So I budget, I save, I invest. It's a lifestyle. All right. And the thing about it is you become more free when you live your life like this, you become 10 times more free because that consumerism goes away. You know the value of your dollar. Now when your dividends come back, like my dividends come back on my Cash App, my dividend debit card, what I call it, and I have $250 a month on my Cash App from dividends. Yeah, maybe I go buy a game out of that. Maybe I go buy some fast food out of that, right? So I have a little bit of consumerism once I figured out the game. All right, so annuities, Social Security, all this stuff, you're betting against yourself. If you're going to work for 50 years and depend on your Social Security check, you've bet against yourself. All right, that's not a good look. You're going to go from working to like trying to live on $3,000 a month. That doesn't sound fun. Okay. So grab this big book right here. Don't Gamble Retirement 9. All right, grab it. It's amazing. It's huge. And then go back and read the other 8 of them. This one's even bigger. The biggest book on passive income. That's on Kindle Unlimited. All right. If you're a Kindle Unlimited member, try to get through that book. You probably can't make it through it. It's 120,000 words. So 320 chapters. It's ridiculous. It's a big book. All right, go down here. You have all these free books in here. And of course, grab this annuity. I like to read, like I said. So with that being said, I will see you on the next one. Bye.